We've got people waiting for your call. We are exceptional at taking your requests and turning it around, providing a loan quote, closing on your deals. But even if you don't have a deal, on your plate right now, just call. We'll talk to you about our terms or process. It's pretty simple.
You're listening to the AZREIA Show. If you're looking for quality real estate investing information that you can trust, you've found it. Stay tuned and join the tens of thousands of members that have already benefited from AZREIA, your home for education, market information, support, and networking opportunities that will advance your real estate investing career.
What's up, everybody? Mike Del Prete, Executive Director of the Arizona Real Estate Investors Association, and this is the AZREIA Show. I have a very special guest, Kevin Highmark of Capital Fund One, the COO. So the reason we're bringing Capital Fund One on is they are new business associates, and they provide hard money lending. So we want the members to get to know all about them, what they do, how they work, how they operate. I'm very excited for this episode with Kevin. So let's jump right in with Kevin. Kevin, tell us about yourself. How'd you get into the Capital Fund One world and hard money lending?
Yeah. Well, thank you for the opportunity. Thanks for having me. So my name is Kevin Highmark. I am pretty much an Arizona native. So grew up, just kind of exposed to real estate like most Phoenix natives. We had some level of exposure to it, just it being such a large part of our economy for so long, but did not get into real estate, right out of school. Mm-hmm. First got into sports representation back in, I think, 2012, and out of college did that for a couple of years in the NFL, flirted with trying to help the firm open up their baseball side of things, but just didn't fall in love with it, and briefly did a stint in conventional lending. Definitely didn't like conventional lending. Mm-hmm. Respect all the conventional lenders out there. Yeah. It just wasn't for me.
Yeah,
I don't like the red tape.
I look at it like it's the same thing in my world. Like I never wanted to be an agent.
Yeah.
It's like, yeah, I get it.
Yeah.
For sure.
And so went into medical sales for a few years, and, in the back of my mind, doing the medical sales to just really increase my sales ability, business development, stuff like that. And while doing that, went back to ASU to get my evening MBA. Mm-hmm. And so during that time, I was looking for an opportunity in finance and real estate, and was actually introduced to a competitor of capital funds, Inca Capital. They focus more on commercial development, but the concept of private lending, sourcing money from individuals and then lending it to real estate investors, I just fell in love with it immediately. Awesome. So over the next 6 months, I tried to find the other private lenders in the market, found Capital Fund. Fortunately, I had a connection through a buddy with who is now my partner, Tyler Larson. And, he told me, go get your NMLS license, and maybe we could let you cold call here. Okay. And so that's what I did to get into the industry. Took a little bit of a step back. Medical sales is profitable, but really like private lending. It just seems to be recession proof to an extent, in the sense that you got opportunities to finance real estate transactions in good times when the market's going up. And then when the market's down, savvy real estate investors are going to take advantage of that, and they need to be able to strike. So cutting out the red tape with the conventional lending, coupled with the fact that you're working with people who are savvy, entrepreneurial, and taking advantage of opportunities, seemed like a great industry to get into. So I joined Capital Fund in January 2018.
Okay.
There was about 5 or 6 of us at the time. The guy who hired me, he was the only loan originator. He left about 6 months after I joined. And so fortunately, I got to step into his shoes. Great. So got to assume a lot of our, all of our relationships, and then started building out the team from there. A couple of my first hires were Zach and Jacob Furman, the Furman brothers. If anybody out there works with Capital Fund, you probably ran into those two guys. And we just started building out the sales team. So now we've got, across the 5 states that we're in now, upwards of 25 loan originators, about 90 plus employees.
I would throw, how many states is that?
Throughout the Arizona, Colorado, Texas, Tennessee, and Georgia.
Good for you. So let's jump in. So you're here focused in Arizona. Yeah. Well, obviously operate the whole company, but so in Arizona, tell us about your product. Like what loan products do you have?
Yeah. So we got started in 2009, primarily funding trustee sale transactions. Mm-hmm. You and I were talking about how special Arizona is. Mm-hmm. For many different reasons, just the data that you have through the county tax records and the Cromford report. I
a
mean,
lot of states don't have none of that.
If anybody listening has tried to find a data aggregator like the Cromford report in any other market, it doesn't exist.
It really doesn't,
No.
because when we deal with all the other RIAs around the country, no one has the data that we bring to our members. And at our monthly meeting on the second Monday of every month, Tina comes by, or we always have her data, her and Mike Orr's data in there.
Yeah, so I have asked Tina if she could set up shop in Dallas and Atlanta and Nashville and Denver, and she said no, she's good.
It's a lot of work.
Ton of work.
Yeah, we even asked just for Tucson data, and they're just like, that's a whole nother ballgame.
Yeah, you got to put all the pieces together in each market. So anyways, another reason Arizona's special is the trustee sale transactions that, if you have the opportunity to go bid on a property at the foreclosure auctions at the county courthouse steps. In Arizona, you bring your $10,000 cashier's check that gives you access to bid on the property. And then you have 24 hours or until the end of the next business day to come up with the rest of the funds.
Got it.
So we started buying properties at the trustee sale, but quickly we pivoted. And this is before I was there, but Mike Anderson, our CEO and founder, and then Noah Brocious, our president, they quickly pivoted and started lending money to the people who were at the trustee sale, winning those bids. And because we have 24 hours to facilitate those transactions, we set up our model around being able to identify opportunities, underwrite the real estate, the property itself, get the documents together, review title, and then have the funds available to fund. So to today, we can still fund trustee sale transactions. We have largely the same process where we are only looking at the asset itself, the hard asset, hence hard money lender.
Yep.
Some people are confused by that. It's not because we're a bunch of hard guys. It's because we just look at the hard asset rather than looking at a soft, credit underwrite.
Got it.
So that model exists today. So if you were somebody who's looking to get financing from us on a transaction, because we're just looking at the asset itself, we just need an executed purchase contract. Obviously, if it's a refinance, then contract isn't necessary. We'll need current photos of the property. So if it's on the MLS, we can use those. If you got a Dropbox link from a wholesaler, we can use those. If you just went out to the property and snapped photos on your iPhone, that works too. We'll need your budget. So if it's an extensive rehab budget, we'll probably want a line item. But if it's a cosmetic flip, then something as simple as, hey, I'm going to spend $40,000, roughly $10,000 on landscaping, $10,000 on flooring, whatever it is, that works. And then we're going to, send the deal to our underwriters, and based off of comps, right? I mean, we lend primarily on single family residential assets in primary core markets. There's a ton of data, right? I mean, these are heavily transacted areas in Phoenix, Chandler, Dallas, Denver, the high density suburban areas, right? With good opportunities for redevelopment, for flips. So there's lots of data, is my point. So if you can just provide the current photos of the property, we'll be able to quickly assign our current value. And then based off of your budget and your experience, we'll be able to assign our future value.
Got it.
And it's as simple as that. If we have that information, then we can turn a quote around to you, usually same day. But if it's a rush, if it's a trustee sale transaction, we'll turn that around in an hour. Yeah. But if it's something that closes in a week, we'll get you terms the next day. If those terms look good, then you tell us to move forward. We'll reach out to the escrow team. We don't choose the title on escrow. That's really, so if it's a refinance or purchase or whatever, we don't have a preference as long as they're ready to go, right?
So going back a little bit, a lot of questions. So before you even have that contract, you guys support the investor with like a proof of funds of some sort. Are you guys able to do that, or how's that work?
Yeah, we can send you a pre-qualification letter.
Okay.
So that you can go shopping. And a lot of sellers, even on an off-market deal, they just want to see that you have some sort of relationship with a capital partner, which is what we are, right? Because the pre-qualification letter, typically in a conventional pre-qual, they've underwritten you as a credit-worthy borrower. Yeah. But because we're not doing that credit underwrite, we're essentially telling the seller, hey, look, we know this person, they're a real estate investor, and once we get this contract, we do have the funds available. So once we get the contract, we'll underwrite it. And then contingent on the underwrite, this is roughly what our loan amount's going to be. That's, especially on an off-market deal, that's usually sufficient for a seller to see.
Yeah, and a lot of agents want to see it as well. This is definitely, you want to at least get in contact with Capital Fund One just to at least have that so you can go shopping.
Yep.
And also, so when you bring that deal and you guys are underwriting it, they are like a second pair of eyes as well. So it's if they see something that they don't like, or maybe they're going to pass on a deal, or maybe you have to put more down payment, and maybe this is good feedback for you to look at the deal and get their professional opinion.
Totally. Yeah. And like we were discussing earlier, we know we're not going to win every deal because at the end of the day, we're real estate investors, and real estate investors favor some neighborhoods over other neighborhoods. They favor some assets over other assets. They have real life experience where maybe we've lent on a fire damaged property before and got burned. No pun intended.
Yeah.
But some people out there have bought fire damaged properties and they turn it into a great profit.
Yeah.
That hasn't been our experience. So we'll probably be more conservative than you will on that.
Makes sense.
But the good news is there's a ton of hard money out there.
Yeah.
And there's guys like us who we're truly hard money lenders where we'll just look at the asset and if we like it, we'll close tomorrow. Mm-hmm. And there's people who are going to take their time a little bit more. They may ask for some bank statements. They're going to want to really vet your experience. They're going to want to pull your credit score. If they're going to put you through the ringer, you could probably expect a lower rate and maybe some more leverage. So if you have time, that's an option for you too. And so my point is, it doesn't hurt to come to Capital Fund with a loan request because one way or another, we're going to get you a quick response.
Huge.
And one of the reasons that we've grown over the years, we started in 2009 with $2 million. We now manage about $900 million. The reason that we've grown is not because we're the cheapest. It's not because we offer the most leverage. We'll be on average 15 to 20% down with us. If it's a really good deal, we'll only require 10% down. We're right now in Arizona, about 10.5% interest rate, 1 point loan fee. And that's competitively priced, but there's definitely cheaper people out there. And there's people who are consistently going to give you 90% loan to cost. But the reason that we've succeeded over the years is we do a good job at capital management. So we always have funds available to fund your deal. We have never missed a deal for lack of funds. And when we give you that loan quote, that's what we're going to fund the deal at.
Yeah.
It's going to be that loan amount, that interest rate, that loan fee. Nothing changes. And that's because we have a large fund that we have full discretion over. Mm-hmm. So our model is just set up to be streamlined for the borrower.
And then time kills deals, right? Especially if you're in that wholesale market, you go fast. So if you're ready to go and you got your down payment, you want that money to be there as soon as possible. And getting a quick answer is very important when you're trying to get a good deal. I love that about you guys. So let's go over the terms just to kind of paint the picture. So you said 15. So the acquisition price is $300,000. The borrower needs to come up with 15% of the $300,000.
It depends. I'd say if you're an experienced borrower and you think you're buying it at market value, we have 4 leverage thresholds that we can bump up against. We go up to 75% of the future value, 85% of current value, 85% of total cost, and 90% of the purchase price.
Got it.
So it's whichever one that we bump up to first, meaning if you're buying the property at a discount, then when there's future value, there's meat on the bone. And that means that we may be able to get up to 90% of the purchase price because even at 90% of the purchase price, we're at 85% of current value because you're buying it at a discount.
Some lenders don't take that into consideration. I know hard money lenders.
Yeah.
Like, cause there's deals where I bid at 50 cents on the dollar and they still want the 15, 20% down.
Yeah. Yeah. And so we're always going to require at least 10% down.
Yeah. Which is fair. Okay.
Yeah. But because again, skin in the game in real estate, for those of you who are experienced, understand skin in the game is everything, right?
So you guys are open to, hey, maybe your first few deals, you're at 15%, whatever it may be. And then just a generic deal. But if you got the experience, you guys got a track record with it, you guys are open.
Yeah. Even if you haven't done deals with us, but you've done deals, I mean, we have ways of confirming that you successfully completed flips in the past. And we're going to underwrite the asset. So we're not, I mean, if you're buying it at a discount, you're buying it at a discount. And if it's got good upside, you're probably going to get our max leverage, especially if you're an experienced borrower.
There's a lender I would use because as a wholesaler and flipper, you have multiple ways to exit, right? So sometimes you get that property where it's like, hey, I got to clean it out. Sometimes I'll buy the property, take it down just to clean it out and then wholesale it again.
Sure.
And then I would have some lenders that would just prorate my interest for the month. Some lenders would want, no, I need a guarantee 1-2 months. What do you guys do on those quicker turnarounds?
Yeah, we don't have a prepayment penalty or a minimum interest guarantee.
Okay.
Yeah. So the way it works with us is if you close on the 15th of the month, you're basically going to prepay the remaining 15 days of the month.
Okay.
And then you don't have a payment the first of the next month. So your next payment would be the following month. And that's interest paid in arrears. So when you pay off the loan, let's say you paid it off on the 2nd of the following month, you would just have the 2 days of accrued interest.
Got it.
And that's it. So there's no minimum. Now, the only time we do have a minimum interest or a prepay is we don't just do fix and flip loans. We can do ground up construction, land development, commercial, multifamily. About 70% of what we do is in fix and flip. But sometimes we do have $15 to $20 million loans, and we have to go out and raise money and that's a sizable amount. So in that event, we will have like a 3-month interest guarantee or something like that.
All right.
Yeah.
Cool. So obviously you guys will go through those terms. All right.
But on fix and flips, no prepay, no interest guarantee.
And then let's talk about points. So what's it cost to do one of these deals?
About 1 point.
1 point?
Yeah.
Okay.
So it varies.
Which is 1% of the purchase price.
Yes. Yeah. Thank you. Of the loan amount.
Loan amount. Got it. Sorry.
Yeah.
Yep.
And that would be on the total loan amount. So we do renovation loans as well, rehab loans.
Okay.
So that would be, for example, we fund, let's say $200,000 at closing to help you acquire the property. And then we hold back $50,000 and we fund that $50,000, $100,000, whatever your rehab budget is. We'll fund that as a draw, as a reimbursement of work completed.
Okay. So do you need like a scope of work?
Yeah. So if it's a rehab loan, we're going to want to see a line item budget.
And how many draws are usually in?
We don't have a limit.
Okay.
So you could take out a loan every $5,000 of work or every $100,000 of work. It's up to you. We will send out a third party, a third party inspector to verify that the work has been completed, but it's a 3 to 5 day process. So you complete $50,000 worth of work. You send us, when you close the loan, we'll send you a draw package, and then you'll just complete the draw request, send it into our team. We'll send the third party inspector out there, verify that the work was completed, and then wire you the money.
Got it.
And it's usually at 100% disbursement. So
technically you can go in there with getting your acquisition funded and the renovation with you guys.
Yeah.
Okay.
Up to 85% of total cost.
Got it.
So if it's a total cost of $400,000 with us, the total equity or the minimum amount of equity that you would have to bring is 15%. So that would be $60,000. So
Okay.
so 15% of cost you'd be responsible for, and we covered 85.
And you guys aren't, so that 60, we get creative as investors. So if I was like, hey, you got a buddy to give me the 60,000.
Sure.
You guys aren't like Bank of America where you're like, hey, let me see seasoning. We can borrow the money and leverage different.
We don't source down payments.
Got it.
If your buddy wants to secure his interest in second position, which happens a lot, just let us know. We're fine with that. And we get it. Everybody's got investors. I mean, that's literally what we do is we invest.
Yeah, for sure.
Unless you're sitting on a mountain of cash, you're probably bringing in an investor once you get to your business to a certain point. If you want to do this full time, most people bring investors in.
Yeah.
If you're successful at it,
Leverage for sure.
Yeah.
Okay. So another thing that I notice sometimes the hard money lenders is the working with the title company. So sometimes title, I don't know who's telling the truth, but sometimes I'm waiting on the docs. So obviously I know you guys are fast, so I'm sure you got the great answer, but are there any issues ever with the title company and make sure the deal goes smooth?
That's a big advantage of being in the AZREIA network, right? Is some title and escrow agents they build their business around facilitating investment real estate transactions. Sure. And those are the ones that you want to use.
Yeah.
Because those are the ones that understand, hey, look, we got to get title. We got to review this commitment. And if we're going to take exception, let's hammer this out fast so that we can get the docs. And then let's balance this quickly and get this thing to the closing table because time is money. So not all title and escrows set up that. There's not, but there's a ton of really good ones here in Phoenix. And I'm sure through this network, you'll be able to identify a lot of them.
Yeah, we definitely work with Great American Title. And we always say investor friendly, right? Meaning not just title, your insurance agent, your real estate agent, your property manager. You want to deal with people that understand us investors, how we move quick, how we work with these complex deals and liens and judgments. So it's all very important to have investor friendly everything on your team. All right. So very simple. Hard money is, it's an aggressive loan. It's for you to get into a deal. It's not for you to do a long-term hold. But if someone did want to take their hard money loan and maybe acquire the deal and maybe refinance. Do you guys have any other products that are longer term, or is this quick?
Yeah.
Hard? Okay.
Yeah, we can facilitate, if your plan is to put a tenant in place,
Okay.
we can facilitate a DSCR loan,
Oh, okay.
a debt service coverage ratio. It's not going to go on our balance sheet, but we just being in the private lending space, we've built a lot of relationships, a lot of outlets, and those rates aren't that bad right now.
You're not too far off from regular banks.
No, they're as low as 6 3/4.
Wow.
It's got to cover the debt service. 6 3/4 on an amortized 30-year fixed. It's a high payment.
Yeah.
So you may not be probably not going to get 80% current value.
Yeah.
Maybe you will if it's a really good cash flowing property, but got to get a tenant in there. And that program, not to be confused, is not hard money. It's what I would call soft money, in the sense that they're going to pull your credit. So you have to have a minimum. It varies depending on the outlet. And then you will need an appraisal.
Yeah.
And it's going to have that addendum that shows the rental rates in the area.
Got it.
So the outlets will consider, if you've got a property that's leased up for $5,000, but the market rent is $3,000, they're going to use the $3,000. Just be wary of that. That appraisal is going to dictate what the rental rate's going to be.
Got it. All right. So segueing a little bit, you've worked with a lot of real estate investors. You've seen a lot of deals. So what is some advice or a tip you would give a real estate investor?
I wouldn't give advice to a seasoned real estate investor, because I really admire real estate investors. They take a lot of risk. They handle a lot of moving parts, and they're really impressive professionals.
Awesome.
And I'm sitting in the debt seat,
Okay.
right? So debt is debt. Debt is not equity. And what I mean by that is we're encouraged by our investors to play it safe. So when we assign our values, we don't have a lot of incentive to stretch on our values, because any additional risk doesn't increase our upside. Our interest rate is our interest rate. A real estate investor, they are incentive to be optimists, because any additional upside just goes straight into their pocket.
Yeah.
Increases their ROI. Real estate investors, they learn so much because they take it on the nose, and then they improve. And then the next one, they do a little bit better, and they do a little bit better. To a beginning real estate investor, I would say, don't run before you walk and crawl. So, don't take on a $150,000 rehab on a $700,000 purchase. Buy something that is down the fairway, track home for $450,000 purchase, cosmetic, nothing crazy, because things will pop up during your renovation, and you can expect, plan for the worst, hope for the best. You can expect on your first one, shoot for breaking even.
Yeah.
Obviously you want your pro forma to show that you're making a bunch of money, but you're going to learn a lot of lessons. And if you're taking out hard money to buy that property, speed is everything. Prioritize speed. If you can get your contractors out to the property before you close and make decisions quickly, and don't cut corners. That's one thing that was fine in 21 and 22, is you could get into a property, throw a coat of paint on it, and make 20% in 3 months.
You could be a bad flipper and make some money.
That's not happening anymore. You can go look on the MLS and look at anything that's been on the market for more than 70 days, and it's just not anything that you or I would want to live in.
Yeah.
And so if you and I don't want to live in it, why would somebody else accept a 7% interest rate, a $3,000 payment to go live in something that you did a poor job on?
Yeah.
That's the market that we're in right now.
Yeah.
It's cyclical, so maybe we'll get back into that frothy time again. But right now, don't cut corners. So be realistic about your budget and move quick.
Yeah. Would you guys complement that?
Yeah.
For sure.
Yeah. I think that the flip business is best done quickly.
Love it, man. And going into all the transactions you guys are seeing, I love talking to hard money lenders, title companies, just people in the trenches that could always have their thumb or finger on the pulse. I don't know if you're a nurse or not, I guess. But what are you guys seeing in the market right now?
So I'll just speak about Arizona.
Yeah.
And it's slow. I think when we get paid off on a loan, we like to go back and review how did it perform based off of how we thought it would perform.
Okay. And
our borrowers are still exceeding our values, which is good. What I mean by that is if we assign a value of $450,000, let's say it's an after repair value, we like to see that it sold for $475,000. We like to be a little conservative on our values, and we like our borrowers to achieve what they're trying to achieve. So on the properties that are trading, they are trading at a profit, and they are trading at the expected values that the borrower is trying to accomplish. Again, that's assuming they don't cut corners and they put a good product on the market.
Very important.
If you don't put a good product on the market right now, it's not going to sell. And that's going to get really frustrating when you're reaching 100 days on market.
Yeah.
Because you didn't do it the right way.
Yeah.
So be intentional about your design. I've heard a lot of really good flippers say that you don't need to reinvent the wheel. If you're going to buy a property in a particular neighborhood, just go look at what's sold and copy it.
So
right,
true, man. Yeah, I think with the slower market, you got to price it right from the beginning. Put a good product on the market. Yeah, it's very important. And going back to comfort, like watching the market update from Tina at our monthly meeting is huge to get these points. So perfect, man. Well, I loved having you here, man. I'm so excited to have Capital Fund One here in the AZREIA family. So thank you, Kevin,
honored
for being here. Any last words you want to share? How do we get a hold of you guys? What do our members do?
Yeah, I mean, you can www.capitalfund1.com or just Google Capital Fund. We've got people waiting for your call. We are exceptional at taking your requests and turning it around, providing a loan quote, closing on your deals. But even if you don't have a deal, on your plate right now, just call. We'll talk to you about our terms or process. It's pretty simple. Everything's outlined on our website too. So that's how you'd get a hold of us, or go to any of the AZREIA events. Yep. Lots of events around town with real estate investors. So would love to connect with you there. What was your second question? Words of wisdom?
Whatever, whatever you like. Any last words you want to share with us? That's all.
Yeah. I just can't say how much I respect real estate investors enough. I love this industry. I like to be a part of it. Again, I'm on the debt side, so I have a lot of admiration for the people taking risk on the equity side. And I think that from everything that we're seeing, I've got 7 partners and 4 of them are very seasoned, just old, but seasoned, and very experienced in real estate. And they have a very good perspective on the macro economy, and they really understand this market. And we're all very bullish on Arizona long-term.
Yeah.
Arizona is a fantastic market. We just have so many exciting companies moving into the market, and we wouldn't be so heavily invested. We've got $500 million deployed on assets here in Phoenix.
Wow.
So for whatever that's worth, not just Phoenix, the Phoenix Metro, but for whatever that's worth, it's just an indication that we really think that this city's got a lot of legs. And I think there's not many people who would disagree with that.
The job growth, population growth, those are the key things, and you got them both.
Yeah.
So you heard it from Capital Fund One. Go out there, get some properties locked up, flip some houses. Capital One's here to support you. And that's a wrap for the AZREIA show. So head to AZREIA.org/calendar. Check out our events. We do about 15 a month. Would love to see you at them. Also meet the Capital Fund One reps while they're hanging out networking. And I'll see you in the next one.
Perfect.
Thanks for listening to the AZREIA Show with your hosts, Marcus Maloney and Mike Del Prete. We hope you enjoyed this episode. If you found this information valuable, head over to AZREIA.org and learn more about our community.